Meet Kofi. Kofi's 24 years old. He works in a small firm fixing computers and tech gadgets. Kofi makes 2,000 Ghana cedis per month after tax. He's very smart with investing his money and wants to save 5% of his salary each month to put into a pension pot for the future. Kofi plans to retire in 41 years' time at the age of 65. How much will Kofi have at retirement if he starts saving from today? 5% of Kofi's salary is 100 Ghana cedis, which he puts towards his pension pot, where he is set to gain an estimated average yearly interest rate of 16%. By the time Kofi is 65, he would have contributed a total of 49,200 Ghana cedis, retiring with a total of 5,064,825 Ghana cedis and 5 pesos, at an estimated average yearly interest rate of 16%. The interest gained from his contribution is 5,015,625 Ghana cedis and 5 pesos. Kofi thinks this is a great investment and contacts Secure Pensions to set up his account. Be like Kofi. Plan your future today with Secure Pensions Trust Limited. Meet Kofi. Meet
Hey, Desmond, you shut down. What's up?
Well, I for wear singlet.
Oh no, you make guys smart. I mean, last time, like they did some corners.
Oh yeah,
I'll be everything cool.
Charlie. Everything cool by grace. Your side.
Actually, we are good, Charlie. I'm here with Leon. I'm here with most of the team. Baba is here, Nana is here, Theresa, Kofi from investments, Eric. So we are good to go in a couple of minutes.
Okay, let me go. Abi, my place be bright enough, right?
Yes, it's quite bright. We can see you clear. I think it's even brighter than ours. So I actually don't know if it be because of the
Nice.
Thank you.
You should have more time.
Meet Kofi. Kofi's 24 years old. He works in a small firm fixing computers and tech gadgets. Kofi makes 2,000 Ghana cedis per month after tax. He's very smart with investing his money and wants to save 5% of his salary each month to put into a pension pot for the future. Kofi plans to retire in 41 years' time at the age of 65. How much will Kofi have at retirement if he starts saving from today? 5% of Kofi's salary is 100 Ghana cedis, which he puts towards his pension pot, where he is set to gain an estimated average yearly interest rate of 16%. By the time Kofi is 65, he would have contributed a total of 49,200 Ghana cedis, retiring with a total of 5,064,825 Ghana cedis and 5 pesos, at an estimated average yearly interest rate of 16%. The interest gained from his contribution is 5,015,625 Ghana cedis and 5 pesos. Kofi thinks this is a great investment and contacts Secure Pensions to set up his account. Be like Kofi. Plan your future today with Secure Pensions Trust Limited. Meet Kofi. Kofi's 24 years old. He works in a small firm fixing computers and tech gadgets. Kofi makes 2,000 Ghana cedis per month after tax. He's very smart with investing his money and wants to save 5% of his salary each month to put into a pension pot for the future. Kofi plans to retire in 41 years' time at the age of 65. How much will Kofi have at retirement if he starts saving from today? 5% of Kofi's salary is 100 Ghana cedis, which he puts towards his pension pot, where he is set to gain an estimated average yearly interest rate of 16%. By the time Kofi is 65, he would have contributed a total of 49,200 Ghana cedis, retiring with a total of 5,064,825 Ghana cedis and 5 pesos, at an estimated average yearly interest rate of 16%. The interest gained from his contribution is 5,015,625 Ghana cedis and 5 pesos. Kofi thinks this is a great investment and contacts Secure Pensions to set up his account. Be like Kofi. Plan your future today with Secure Pensions Trust Limited. Meet Kofi. Kofi's 24 years old. He works in a small firm fixing computers and tech gadgets. Kofi makes 2,000 Ghana cedis per month after tax. He's very smart with investing his money and wants to save 5% of his salary each month to put into a pension pot for the future. Kofi plans to retire in 41 years' time at the age of 65. How much will Kofi have at retirement if he starts saving from today? 5% of Kofi's salary is 100 Ghana cedis, which he puts towards his pension pot, where he is set to gain an estimated average yearly interest rate of 16%. By the time Kofi is 65, he would have contributed a total of 49,200 Ghana cedis, retiring with a total of 5,064,825 Ghana cedis and 5 pesos, at an estimated average yearly interest rate of 16%. The interest gained from his contribution is 5,015,625 Ghana cedis and 5 pesos. Kofi thinks this is a great investment and contacts Secure Pensions to set up his account. Be like Kofi. Plan your future today with Secure Pensions Trust Limited. Meet Kofi. Kofi's 24 years old. He works in a small firm fixing computers and tech gadgets. Kofi makes 2,000 Ghana cedis per month after tax. He's very smart with investing his money and wants to save 5% of his salary each month to put into a pension pot for the future. Kofi plans to retire in 41 years' time at the age of 65. How much will Kofi have at retirement if he starts saving from today? 5% of Kofi's salary is 100 Ghana cedis, which he puts towards his pension pot, where he is set to gain an estimated average yearly interest rate of 16%. By the time Kofi is 65, he would have contributed a total of 49,200 Ghana cedis, retiring with a total of 5,064,825 Ghana cedis and 5 pesos at an estimated average yearly interest rate of 16%. The interest gained from his contribution is 5,015,625 Ghana cedis and 5 pesos. Kofi thinks this is a great investment and contacts Secure Pensions to set up his account. Be like Kofi. Plan your future today with Secure Pensions Trust Limited.
Hello, good evening, everyone. If you can hear me, kindly just give me a good evening or a hi in the chat so we are live. I see a few hands. I see highs and good evenings. Okay, we are good to go. All right. So good evening, everyone, once again, and thank you for taking time out of your busy schedules to join us this evening. Welcome to Secure Pensions Trust Limited, SPTL Live. So this evening, we are going to be hosting our first webinar, which is one of many to come. And we are going to be talking about pensions in Ghana and the pensions market. And our focus for this evening is going to be pensions and the benefits of an early start. This evening, we'll be learning about savings. We'll talk a bit about investments, the role that pensions plays in your investment strategy, and how you can use pensions to maximize your future investments. We'll also look at how you can save effectively and the advantage you have from starting your investments early. Of course, I'm not here by myself. My name is Kwaku, Ayisa. I'm the Business Development Officer at Secure Pension Trust. And on our panel today, we have two able-bodied and experienced people to help give us a broader overview and a much more deeper insight into the pensions and investment markets in Ghana currently. So our first panelist is Theresa Afile. She is the current Managing Director of Secure Pensions Trust Limited. Theresa has experience in asset allocation, customer service, and pension fund administration. She also has 9 years of experience in the pensions industry in Ghana. And on top of all that, she's also an ordained minister of the gospel. So if Theresa can just turn on her video so you can see, okay. Hello, Theresa, and welcome.
Hello, everyone. Pleasure to have you on this evening, and I all come together. Thank you.
Thank you very much, Theresa. Also on our panel today is Desmond Breden. Desmond is a good friend of mine, and he's the head of client services at Stanley Investment Management Services Limited. Desmond has 6 years of experience in the investment space in Ghana. He's also a chartered member of the Association of Chartered Accountants, ACCA UK, and he won multiple awards on his quest to become an ACCA member. Desmond, you are welcome. Unfortunately, Desmond is a Chelsea fan, so we don't see eye to eye from time to time, but welcome, Desmond.
Thank you, Kwaku, for having me. It's a pleasure to join the Secure team with this first webinar, hopefully the first of many to come.
Thank you, Desmond, and yes, definitely going to be the first of many, and we hope that you join us for more and more of these webinars. Desmond is also doing a lot of good work in the education space in Ghana when it comes to investment and savings and budgeting. So you can join him anytime on social media. His handle is @Palenzi77, and from time to time, he hosts different webinars on social media and gives insights into investment, savings, and budgeting for young folks, people who are just entering the work market for the first time and are trying to find their way in what can be a turbulent investment market in Ghana. Okay, so without much ado, we would like to start the webinar now. We are going to start with, Secure Pension Trust, we like giving things away from time to time. And if you're on the webinar now, today is your lucky day for joining early. So we want to start with just a quick true or false segment. We have 5 questions. Each correct answer comes with a price of credits of 10 Ghana cedis, irrelevant of the network you are on. So the only rule is that you don't unmute your mic and tell us the answer. You type your answer in the chat. So the first person to type the correct answer gets the credits. Our IT professional who is handling our back end would contact you privately for your phone number and send you the credits once you confirm that you are the winner. So the first question. If you are ready, please just say ready in the chat, please, so that we know you are ready. Okay, I see a lot of ready, so let's go. First question is, SNIT is the sole body responsible for managing pensions in Ghana. True or false? Hey, more than ready. Okay, that's very, very fast. Let's see who got it first. Give a 50-50 chance. Please, I've been told people are doing Lotto. Please, no Lotto in the quiz. So SNIT is the sole body responsible for managing pensions in Ghana. The answer is false. So SNIT manages Tier 1 and licensed corporate trustees, which Secure Pension Trust falls under manages Tier 2 and Tier 3 pension schemes. I see someone saying they have won. Please, my IT guru will confirm who has won and contact you privately, please. I'm sure he will type in the chat who the winner was right now. So the second question. All pension contributions have to be made by my employer. True or false? False, more falses, a lot of false. Hey, are you both sure? All pension contributions have to be made by my employer. True or false? So the answer is, drum roll, false. So workers contribute 5.5% of their basic salary towards their mandatory Tier 1 and Tier 2. And individuals can also make contributions to their pensions through a provident fund or a personal pension scheme. I saw someone say individuals can also pay, which is quite good and a very good point to raise. Yes, if you're an individual or you're self-employed, if you're a self-employed person, you can also make contributions to your pension. So you don't necessarily have to be working for an employer before you can make contributions to pensions for yourself. Thank you, Alex Yaoduba. I've seen your answer. So question number 3. The minimum age to join a pension scheme in Ghana is 25 once you start working. The minimum age to join a pension scheme in Ghana is 25, a personal pension scheme in Ghana. Hey, the code typing for personal pension, no, not general pension. Please read the question well. It's not too late to change your answers. So the answer is false. The minimum age to join a personal pension scheme in Ghana is 15 years of age. So from 15 years of age, you can join a personal pension scheme in Ghana as it stands currently under the law. So our next question, for another 10 cedis of credits. The National Pensions Act was passed in 2008. True or false? True, false, true, false, true. I saw someone's phone number in the answers. So yes, it's true. The National Pensions Act was passed in 2008. The answer is true. Act 766 of 2008. Alex, I think your answers are very long. That's how come you're not winning the prizes. So if you can type true or false first, and then later you give us the explanation. Yeah, Alex, I hear you want to presec. Maybe that's why. NSMP. All right, last question, and then we can dive right into why we are here today. So which entity regulates pensions in Ghana, SNIT or MPRA? Please, if you do a spelling mistake, we won't accept it. I can see NSRAN. Which entity regulates pensions in Ghana? Is it SNIT, the Social Security and National Insurance Trust, or MPRA, the National Pensions Regulatory Authority? And the answer is the NPRA, the National Pensions Regulatory Authority. So they are the body responsible for regulating pensions in Ghana. So congratulations to all our winners. Nanaya, contacting you to send your credit your way. Thank you for participating, and we are going to jump right into our next segment, which is our panel discussion. Okay, so if Desmond and Theresa can give us a hi or a hello, so we are sure their mics are working, then we can just jump in.
Hi, Kwaku.
All right, they're good to go. So like I stated earlier at the start of the webinar, for those who are now joining, I see some people asking if they've not won anything. You have to be faster next time, please. So today we are going to be talking about pensions in Ghana, talking about the current pensions environment, and then the benefits of an early start. So to kick us off, would ask Theresa to give us a brief look or a brief dive into what the pensions market currently is looking like in Ghana.
Thank you very much, Kwaku. And that was an interesting session we had there. It makes us realize that there's still a lot of education that needs to be done as far as the pension system in Ghana is concerned. So I'll quickly walk us through what currently pertains. The pension system that we currently operate in Ghana is called the 3-tier pension scheme. And what it simply means is that we have 3 main types of pension arrangements in place for workers in Ghana to participate in. And the law was passed in 2008, as we saw earlier, but it became effective in January 2010. So from 1st January 2010, the 3-tier pension scheme took off in Ghana. And prior to this, SNIT was the only manager of pensions. And the law that regulates pensions in Ghana currently is the National Pensions Act 2008, Act 766, which was amended by the Act 883. And we also have some regulations that govern the operation of this act. And I want to touch on a few new things that the new law brought into effect. And the first of these things is that we now have a regulator of pensions, and that's the National Pensions Regulatory Authority, responsible for approving the schemes that operate and licensing all service providers, as well as overseeing the entire pensions landscape to ensure that all is in order. We also have service providers who are licensed to administer the Tier 2 and the Tier 3 schemes, and these are the trustees, and therefore SNIT is no longer the only manager of pensions, but we also have trustees. Trustees could be corporate trustees, a company like Secure Pensions Trust, or individuals who make up a board that oversees the running of these schemes. The third thing that I also want to touch on is the tax incentives that have been introduced under the new law. And this is to ensure that while you are saving money towards your retirement, the government is incentivizing you by waiving the taxes of that component of your income that goes into the pension schemes. And the last thing that I want to touch on over there in terms of what the law did was to also set the joining age at 15 years. So now as early as 15 years, it's possible for you to join any of the pension schemes and start contributing. When it comes to the 3 tiers that we talk about, or the 3 branches or the 3 arms, based on how you understand it, the first one is the SNIT scheme, or the National Social Security Scheme. It's compulsory, it's managed by SNIT, and ultimately, after contributing over a period, the scheme is required to pay you a monthly pension. And to qualify for the monthly pension, you should have contributed for a minimum of 180 months or 15 years. Then you can qualify for a monthly pension. So when it comes to SNIT, the benefits are formula-based. And you'd find that people will typically say that our benefits are not very decent under the If your salary is generous, then you'd also end up getting a good benefit at the end. So that's one thing that we should keep in mind. The second tier, which is the second arm of the pension scheme, is also compulsory, and it's work-based or an occupational pension scheme, which means that you become a member automatically by virtue of your employer to participate in it. And this scheme pays lump sum or one-time benefits when members retire. And under the 2 compulsory schemes, the contribution rate is 18.5%, where we have the employer contributing 13% on each worker's behalf, and the workers also matching it with a contribution of 5.5% of their basic salary. And together, the amount is split between the first year, 13.5, and then the second year, 5%. So that at a minimum, the law ensures that you have a monthly pension to look forward to, and then you also have a lump sum benefits to enjoy. The last one is the tier 3, which is voluntary. And under the scheme, you can contribute for tax purposes up to 16.5% of your income. So after, between your employer and yourself doing 18.5 under tier 1, there's another 16.5 available for you to contribute tax-free into the pension scheme. And there are 2 types of schemes under this one: the Provident Fund, which typically involves an employer-employee contributing together, or a personal pension, where you as an individual, for example, can work to Secure Pensions Trust and say that I want to start contributing towards my pension and I want to open an account. You don't need to come with your employer. You just come personally, you go through the process and you start paying into your accounts. And also under the tier 3, you'd realize that the benefits are paid as a lump sum. So this is what currently pertains in Ghana, where we have SNIT managing the first year, and then the corporate trustees like Secure Pensions Trust managing the second and the third tier pension, so that you get the benefits of a monthly pension and also a lump sum benefit.
Thank you, Theresa, for that very deep dive into pensions in Ghana currently. I'm sure for a lot of times when you walk out and you go into the street and you talk to people, even people who are working in the formal sector, you find a lot of people thinking that their pensions are SNIT and SNIT is their pensions. And you find some companies that are not even aware of the fact that they have to make a compulsory payment, which is the 5.5%, which has to go to corporate trustees. So it kind of shortchanges young workers in the Ghanaian markets currently. And by the time they realize that they have to be making tier 2 contributions, they've lost a lot of value because of the time they've missed. You made an interesting point about the voluntary contributions and also pensions in general by saying that the government made the age when one can join 15 years. And that brings me to Desmond. So Desmond, quick question. I'm sure you get this question a lot, but I've also had it recently while speaking with some of my friends and a few young people I know about when exactly should one start investing? At what age? Where should you be in your life? What should you be looking at? And when should you start thinking about saving and investing towards your future? So Desmond, over to you.
Thank you, Kwaku, once again. And maybe before I answer the question, I think it's important we highlight what Theresa said in saying that your pensions is a function of your basic salary, not your gross salary. So if your basic salary is small and your bonuses and allowances is a lot, you may be enjoying now, but your pensions will be struggling in the future. So it's important we re-echo what Theresa initially said. Now to the question, yes, I do get that a lot, and I mean it's important we for the context of this discussion we separate what savings is and what investment also is. Now, when you talk about savings, it simply means deferred consumption or delayed gratification. Let me break it down to make it easier. So if I have 100 cedis today, or say even 10 cedis, and I don't spend it on, if I don't use 60 cedis, because I like pizza a lot. If I don't buy the pizza today and I keep it under my bed, so okay, I keep the money in my wallet or even in a shoebox, I have saved. I have not spent that money. But ask yourself, what is that value of that 60 cedis in, let's say, a year's time? Even a year is too long, a month's time. Just even think about petrol. Can that 60 cedis buy through your tank in the next week or two? You understand? So savings is good, but if not for anything, time value of money would play with your money. Truth, that's the truth. And the value of your money will not be the same, let's say, the following day or even 2 years from now. And that is why investment is also critical. Now, once you save your money, you need to invest. Now, investment is simply buying of assets or securities for which you expect a return. So the assets could be paper assets. What do I mean? Let's say a Treasury Bill, a unit trust, or a mutual fund, stock shares. You can even invest in, say, properties in a business, because you expect a return on your saving, on your investment. And that is where we need to have that distinction. Now, when should you start thinking of saving and investing? I think when you start earning your first CD, or when you start making your first CD, you start thinking about savings and investment. And like I mentioned, time value of money plays a very critical role. And I'm sure as the conversation goes on, I would give practical examples of how time value of money plays or comes into play. Because again, let me throw in an example. If you won a lottery and I decided that, okay, I can keep your money for you today, 1,000 cedis. In fact, let's use the credit. Now, let's say the credit that we won today, we tell you that, no, keep it, we would give it to you in a year's time. I'm not sure the impact of it will be the same if you took it today, because what that 10 cedi credits can do for you today, it may not do the same thing for you in a year's time. And that is where time value of money comes in. So I'm sure as we go on, like I mentioned, we'll dive into how time value of money plays a key role. And that's why once you start making your very first CD, you start thinking about savings and investment. Thank you, Kwaku.
Thank you very much, Desmond. I like the fact that you brought up time value of money. Usually, when I go out to go and speak with people, I also bring up the canned milk or tin milk argument that today you might be buying the tin milk for 5 cedis. And if you don't invest, when you go on retirement or in the future, in the next 2 weeks, in the next 3 weeks, when you walk into the shop, we all know how Ghana is. In a few weeks' time, that 5 cedis will no longer be able to buy that same tin of milk. So I guess when you say time value of money, you're just bringing our minds to the idea that as time goes on and as we get older and older, the things that you can do with 10 cedis today, you might not be able to. You need more money to do the same thing. So it's good to invest and also get value on top of your 10 cedis so that you'll be able to have the same kind of lifestyle, if not even better, in the future. So I would like to bring Theresa and Desmond both back into this conversation, and we just want to speak quickly about the options available to a young person in Ghana currently if you are looking to invest. I mean, the most common option we hear the old folks, at least when I was growing up, the most common thing that was told to me when I started working was buy treasury bills, buy treasury bills. Hey, the treasury bills, oh hey, treasury bills. And that was what was common, and that's what most Ghanaians think of when we think about investing. So are there other options aside the general treasury bills that we have on the market, and how we can tap into those options in order to, of course, also save and invest and gain value on our income? I'll let Theresa go first, and then Desmond can come. Or Desmond, keep going, and then Theresa will come in after you.
Oh, okay, sure. Can you still hear me? Before I go into the options, I always say this. When I come talk about investment, I usually want to draw people's attention to, I mean, we'll talk about different options, but how does any of these options help you in your objectives? So before I talk about the investment options, there are some key things that you need to know, and they will help you achieve what kind of investment you want to go into. And the very first thing is your investment objective. Again, like you mentioned, once you started earning money, your people started telling you, oh, buy Treasury Bill, buy Treasury Bill. But is that Treasury Bill something that help you achieve the goals you want to do? That's the very first question you need to ask yourself. So wherever you want to invest, whatever you want to invest in, you need to ask yourself whether that particular asset would help you achieve the goal that you want to do. Now, the second thing is your risk appetite, or how much risk you are willing to take on. Again, for somebody, you say, okay, you hear about cryptocurrency, you hear about Bitcoin, and you say, okay, so it's a good thing. Let me just jump into it. But maybe your risk profile, your risk nature, how you react to losses is different. Maybe you're not even strong at heart. And the following day, maybe you buy Bitcoin and say $60,000. The following day, it dumps $30,000. That shock can even lead into an early grave. So your risk appetite should also determine where you should invest your money. So those are the two primary things that should help you determine the options that we are coming to discuss. And I think maybe I'll touch on maybe two or three, and maybe Theresa will handle the rest. The very first one you mentioned is the Treasury Bill, and that's the most common. Now, Treasury bills are basically lending to the government. So you decide to give your government money, say for 91 days, which is 3 months, or 6 months, which is 182 days, or sometimes even for a year, that's these 4 days. Now, Treasury bills are discounted in that you pay less and you get more at value or at maturity. So for instance, if you have 1,000 cedis to buy a Treasury bill, the government or the institution will likely take from your account, say 970 cedis. Then at the end of the period, they'll pay you 1,000 cedis back, and that's what we call discounted. Now, many people get confused because, for example, they'll go to the Bank of Ghana website and see that, oh, it's 14%. You need to know that that 14% or that 13% is for the whole year. So if you're buying for, say, a 3-month Treasury bill, that interest is divided by 4. Again, that is the rate that the central bank is selling to the banks. So it is not the same thing that you go and buy from the banks. They obviously need to make a cut on it. And so even if you see 13% or 12%, definitely if you go, they'll take some margin off it and resell it to you at, let's say, a lower interest. Again, to situate the Treasury bill in the context of my earlier point on your objectives and your risk appetite, basically, Treasury bills are for people who don't want any form of risk, because in finance, we tell them as risk-free, generally risk-free, because worst case scenario, we always say this, the government can always print money to pay you. So if you don't want any form of risk, Treasury bill is for you. Again, maybe for somebody who wants to just preserve their money. For example, you are risk averse and you want to keep your money for the next 6 months and pay school fees with it. You can put your money in the Treasury bill, and at the end of the 3 or 6 months, you can just go back for your money and use it. Again, because you are sure that at the end of the day, you get your money back. So that is that for the Treasury bill. Let me not just drag the conversation. Let me just talk about what I call the older brother of Treasury bills, which we call bonds. Now, bonds are just long-dated government instruments again. So instead of Treasury bill being 3 or 6 months, bonds are usually long-term, anything above 13 months. So 2 years, 5 years, 10 years, 15 years. Again, it's lended to the government or a corporate institution. Now, the good thing about bonds is bonds usually yield better or have a better interest than the Treasury bills. Again, it's for if you are maybe looking long-term, maybe medium to long term, you can look at buying a bond. People don't know this, but if you have, or if you want to buy a treasury bill for, let's say, 3 months, you can buy an equivalent bond with the same almost yield to maturity or the same period, but you get a higher or a better yield if you negotiate better. So people should probably start exploring, instead of saying, oh, I'm going to buy a treasury bill, start asking about, say, I want to buy a bond with the same duration like a treasury bill. And it is likely that you may get a better interest than if you bought a T-bill. But again, it's not cast in stone. Let me move to something which I think it's really, really important, and which I call unit trust and mutual funds. Now, the reason why I call it really important is, for many people, the amount of money that they have, and if you are being realistic, in Ghana, many people don't have so much money. So if you tell them to go and invest, they'll tell you, oh, I don't have so much money. Now, unit trust and mutual funds come into play for you in that they give you an opportunity to invest, even if you have very small money. In Ghana, with as little as 50 Ghana cedis, you can start investing in a unit trust or a mutual fund. Now, what is a mutual fund or what's a unit trust? Now, it's just people who have come together, who have pooled their money and given it to a fund manager to invest on their behalf. So that is basically what a unit trust, a mutual fund is. Again, the good thing is we have various options in Ghana. We have a money market type for short-term investors. We have a fixed income type for maybe medium to long term. We have equity for people who are looking to invest in shares. We have a balanced fund, which has a mixture of everything. And you have a real estate investment trust. So again, depending on your goals and objectives, you can find one of them which is good for you. If you want to come to us as Stanbic, we also have really good ones for you to also explore as well. So basically, these are the three, probably I'll leave some to Theresa to talk about, but I could have touched on all of them, but these are the three I'll just focus on for now. Yeah. Theresa.
Okay, thank you, Desmond, for kickstarting that conversation. So risk was one of the big things you hinted on when you were talking about the options that are available. And of course, one of the vehicles that individuals can invest in is stocks or shares. And in Ghana, we have the Ghana Stock Exchange where companies are listed and they trade their shares. So buying shares is like owning a little part of the whole company. So there are a number of people who have invested in the business or act as owners, and you can also buy some holdings into that company. And once you hold that stock, you could either benefit in the form of dividends when it's declared, or you can also benefit from capital appreciation. But of course, you have to remember that it could also go south, where you not benefit from capital appreciation, but rather the value of your investment could go down. And so for people who don't have the heart to see your money doing that dance, you might want to stay far from the stock exchange, though it's been proven that over the long term, if you stay in, depending on the kind of stocks you have, you could make some better returns than on the treasury bills. But it all depends on what kind of risk appetite you have, and then how long you have to also stay in that segment of the markets. So and also on the bonds that Desmond mentioned earlier, he spoke about what the government does, but also private companies could also come to the market to raise money for their business, and they could also issue bonds. And again, that is another one that is a bit riskier than the government paper. So when it happens like that, they also have to pay a premium on whatever bond they have issued, because it doesn't make sense that there is almost a risk-free price to pay when government is borrowing, when you are lending money to government, and then you have to still lend money at the same rate to a private company. There are certain risks involved there, so they have to pay some higher price, and then you have the opportunity to also participate in that, in such an investment. There are a whole lot of others that, for example, they call alternative investments, which involves private equity funds and all that. This forum doesn't afford us enough time to go through the whole list of investment options available. But that is why it's important that you speak to qualified people who understand the business to advise you, to guide you, so that in making your decision, you make sure that you are making it based on sound knowledge or sound advice. You don't take risks. And let's remember, investment is not cha-cha. Investment is not lottery. Investment is not a game of chance. So when you have all these other investment opportunities coming up and they are telling you stories that sound too good to be true, you have to be careful about that. What they are promising you, is it realistic? And does it make sense at all? You know, sometimes we are so greedy to chase after returns that we forget about the possibility of losing our investments. And I believe that you've all been in this country for the last few years, and you've heard a lot that has happened in the landscape. So please, in all your decision making, remember that investment is not a game of chance. Investment is not a lottery. So make sure that whatever returns you are seeking to make is decent enough to create value for you. And more importantly, make sure that you speak to the right kind of people who understand this business so that you make the right choices when it comes to investing your money, because it's hard-earned money and it shouldn't go down the drain.
Well, let me add something to what Theresa said. And it's one thing that we always miss when we talk about investment is doing proper due diligence. Wherever you want to invest your money in, you need to ask the right questions. Who are the owners? How long have they been in operations? Are they licensed by the BOG, by the MPRA, by the SEC? Asking the right questions will help you make a more informed decision. And like Theresa said, if it is too good to be true, then it's probably not true. Thanks.
Thank you very much, Desmond and Theresa. I think the key takeaway from this is if it's too good to be true, it is probably not true. So I believe going forward, when each of us are going to make an investment decision, we'll look to talk to the professionals, the pensions trustees, those licensed by the MPRA, and of course the investment professionals like Stanbic Investment Management Services. Stanbic, you change your name every day, so I struggle from time to time to keep up your name. Currently, Stanbic Investment Management Services, yes. So licensed by the SEC and MPRA, right? Exactly. So we'll talk to the professionals and we'll keep our ears on the ground and our eyes on the road and make sure that we are making the necessary and right decisions with our money so that we don't lose it. Theresa, I'm still on you today. So my next question is, you are a pensions trustee. So people are going to be wondering, why are you talking about savings and investments? And to tie also into that, a question you get often is that when people think of pensions and pensions trustees, they think about older people who are going further towards their retirement. Of course, you've already touched on the fact that the government says you can start saving and investing in a pension scheme from 15 years old. So immediately that means that the younger generation is also included. But I'll be glad if you could touch a bit on how pensions ties into for young people, and answering the question if pensions aren't just for older people and people looking to retire. And also, if you could look at how pensions are compared to other investment opportunities on the markets, the pensions markets compared to other investment opportunities like the Treasury bills and the bonds, which you touched on previously.
Thank you, Kwaku. So on the issue of who pensions is for, what we have heard as part of the conversations this evening is that once you start earning money, you have to start saving and investing. And you would also understand that you don't always have to be working for money. At some point in time, your money must work for you. And pensions is one of the options that you have to be able to set money aside towards your retirement. And when else to start planning for retirement than today when you are young, instead of waiting till you are close to retirement. We've heard of stories where people are in good employment, they are given free accommodation, their bills are being paid and all that. And a few days to retirement, the reality dawns on them that, look, nobody is going to cover these things for me anymore. I have to pay them out of my own pockets. When you are confronted with such a situation, what then do you do? It's good to have a good job that pays all these things, so healthcare is taken care of. I mean, it's great. That is all what we all desire for. But we have to remember that there's a day coming that no matter how long you have worked for such an entity, that your employer will one day hand you a letter saying, thank you for your services. Based on your age, it's now time to move on because you cannot work until you die. So it's important that as young people, even though we think that retirement is so far off, this is the time to start planning. This is the time to start preparing. And once you have set your investment objective and you have the benefit of time, you can even review the plan and how it's progressing from time to time and see if you need to make adjustments. Do I need to increase my contribution rate? Will whatever benefits I'm going to get at the end continue to sustain me even long into my old age? And if you talk to our parents and our grandparents, you realize that the financial obligations don't reduce when you are older. That is when there are a lot more things you need to do apart from the health issues that come up, family commitments and all these things. And times have changed. You can't continue to say that your children are your security in life. You need to empower yourself. You need to take up this responsibility upon yourself and begin to build wealth towards your retirement, And someone might say that I own a business, so I don't need to save for retirement. It is not prudent for you to allocate all your income as all your profits, as your income for a particular period. Then your business will not outlive you. You definitely have to set part of the income you're earning from that business aside towards your pension. So young people, you might think it's too early. When you look over the horizon, old age is nowhere near. But today is the time for you to start planning. Today is the time for you to set aside money and have the benefits of the long term to be able to accumulate enough money to be able to retire comfortably. And when it comes to the investment opportunities that pensions, how competitive are pensions compared to other investment opportunities? One thing that we must realize is that the pension schemes have been operating, especially the tier 2 and tier 3 schemes, for close to 10 years now. And there's enough data to prove that these schemes, if they are not rubbing shoulders with, at least some are even performing better than some of the comparable investment opportunities of the market. But for me, the big thing is that whatever else you are comparing pensions to, the government does not incentivize you to participate in those kind of schemes. For me, it's a plus, because as long as you are putting money in pensions, you get a tax benefit upfront, and then you put money away as well. So in terms of how it compares, I believe that it's fair. The pension schemes are offering a decent alternative as far as investment is concerned. And also you get protection of your money towards your pension goals so that you can set aside money in a pension fund to be able to meet your needs when you go on retirement.
Okay, thank you very much, Theresa, for that insightful outlook. Desmond, I'm back on you, my Chelsea advocate.
Can I add some numbers to what Theresa just said?
Yes, sure. Go ahead.
Again, it relates to whether pensions are for young people or for old people. I did some math, and we always talk about retirement number and everything. How much you expect to spend every month when you're on retirement. If you are, say, 22 years, and let's say you want to retire at age 50, and you plan that, let's say, after age 50, you live another 35 years. So let's say, good or bad, you die at age 85. And you anticipate that, okay, every month after retirement, I'll need 3,000 cedis to survive every month. And we use an interest rate of, say, 15%. If you're age 22, you need to start contributing monthly of 300 Ghana cedis. If you are age 25, you need to contribute 462 Ghana cedis. If you move to age 35, you have to contribute about 2,068 Ghana cedis. So the more you wait, the more drastic it is for you to start thinking about your pensions. So like Theresa mentioned, it is not even for old people. It is for us young people to start now, because the financial commitments are way lesser and much more manageable than if you were 35, 40, because trust me, we will not be able to, or we will not be able to enjoy the kind of pensions that we want. Yeah, thanks.
Thank you very much, Desmond. I've seen a question or two in the chat. If you have a question currently, if you could kindly just type it in the Q&A section, and then we would attend and try and answer them once we get to the Q&A session. Okay. And just to add on to what Desmond said, I mean, we've mentioned SNIT a lot, but I think a lot of us haven't actually taken the time out to calculate what our projected SNIT, monthly SNIT stipends are going to look like. And if you go to the SNIT website, I think they have a calculator on it where you can input your average salary, your average annual salary, and then it gives you an idea of how much to be paying you once you go in retirement. And I encourage each and every one of us from here, just go on the SNIT website, put in the figures, and then you might be surprised at how much less you might be earning once you go in retirement, and it might kind of give you the light push you need to start looking at other investment options, like, of course, secure pension trust and Stanbic investment management services. Desmond, so let me we have two more points we want to touch on, you and Theresa. So let me just lump it into one, and then we can roll over. One question we also get is, people ask if it isn't wiser for them to start saving to get a large amount of money. So basically, instead of starting with, say, 50 cedis a month or 100 cedis a month, I wait and put my 100 cedis in my Susu box every week. And then once I get like 10,000 Ghana cedis, I bring it to the investment firm or the pension trustee and say, here you go. This is what I want to start my investment with. And I think there's a belief that that will let you get more interest going forward. So if you could let us know if that is true or false. And then in addition to that, you and Theresa can touch on any tips you have for young adults on how they can better increase their savings, their discipline when it comes to saving and investments.
Awesome. And in tackling the question on whether it's better to wait for a lump sum, again, I like to put everything into math, because once you put the numbers to it, it becomes easier for people to better appreciate it. Again, I'm using 15% compounded interest because I think that's easier to calculate. So let's take two friends. But you are Man U fan, so I use it as the second example, and I'm a Chelsea fan, so I use myself as the best example. So Kwaku and Kwesi. So we decided that, okay, every month we want to invest 100 cedis for the next, say, 10 years. So we are looking to invest, say, 12,000 cedis at the end of the 10th year, because 100 cedis every year is 1,200. So for 10 years, it's 12,000 cedis. Now, me being a Chelsea fan, of course, I decided to start on the very first day, and I invest 100 cedis every single month. If you look at the 50% compounded quarterly, at the end of the 10th year, I'll be looking at getting 27,000 Ghana cedis as my principal and interest. Let's say you're a Man United fan. You decide to start at the 5th year. You decide to double up. So instead of 100 cedis, you are doing 200 cedis every single month. At the end of the 10th year, you get 17,000 cedis. So even both of us have contributed 12,000 cedis. I'm getting 27,000 cedis, and you're getting 17,000 cedis, about 10,000 cedis gap. So it is not wise, or it is not the best decision to say, oh, let me wait and get bigger monies to before I start. The earlier you start, the better, because again, time value of money plays a critical role. You start earning, if you take advantage of compounding interest, or you get interest on interest, before you realize that little drops of water has become a very big ocean. So for me, it is not about getting in so much money. And the good thing is, like I mentioned, with as little as 50 Ghana cedis, you can start thinking about savings and investment. Another thing we need to look at is, it's quite telling when people say, oh, my money is not enough. Truth is, the money will never be enough. As our income keeps growing, our taste buds keeps changing. Ask yourself, when you do national service, you're buying gobe. Now that you are full-time employment, you're eating pizza on a weekend every single day. I'm using myself as an example anyway. So as our income keeps increasing, we'll keep changing, our taste buds will keep changing, and the money, our responsibility will keep coming. We'll start having kids, we'll have family, healthcare, Charlie. So for me, once you have the little, you start building up 50, 100, 200, and you start going like that. Don't wait till you have the biggest pot before you start investing. Theresa.
Very well said. So let's remember, it's important to start early, and it's great if you can increase your allocations towards investments. I know people give all sorts of proportions. I've heard about when you earn your income, you should give 10% as tithe. For those who believe in tithing, you put 20% into investments, and then you spend the 70% left. And the other thing that we've noticed is that when these deductions towards your investments are done at source, or you automate them, you are forced to be able to live on whatever it is that is left. So let's remember that in order for us to invest, there has to be a trade-off. You must definitely cut down on some expenses. And for young people today, we spend a lot of time on the internet, and that is data, that is money. So we need to be able to build some level of discipline into the way we live our lives if you have a certain plan or goal ahead of you. So it's a great thing to increase your investment, but remember that you have to look at what other things what are the things that are wants in your life. You should be able to cut them off, focus on your needs so that you build wealth. Because remember that whatever income you are earning today, it's not just to cater for today, your life today, but part of the money that you are holding is supposed to take care of you tomorrow, or is supposed to be put away. Let's always remember that we shouldn't spend all of our income, but you should be able to put part of it away. And from time to time, when you get a windfall, sometimes there's a 13th month or a bonus, or somebody just gives you some money. Remember that you didn't plan to spend that anyway. And some of these monies you can put away, and you'll be amazed over time exactly how much you have accumulated. But the most important thing is for you to start. And from time to time, review your plan, add on a bit more. Because as your taste buds are changing, you are moving from your gobe to your pizza. In the same way, your pockets too, you must review it and increase your money. So young people, let's remember that we shouldn't spend all our money today, but it's important that we have some put away towards other things. Thank you, Kwaku.
Thank you very much, Theresa. I've seen a few questions in the chat. I see someone asking that he wants to make a contribution to the discussion. And when we get to the Q&A section, we'll take all the contributions and all the questions together, please. So kindly bear with us whilst we just go through this slide panel discussion. To add on to what, just a little bit on to what Theresa said about the 70-20-10 rule, a book I read called The Richest Man in Babylon also advocated that when you are paid your salary, the first thing you should do is pay yourself. And the first time I read it, it sounded a bit weird for me because I've been paid my salary and you're asking me to pay myself. But the explanation he gave was that usually when you are paid your salary, the first thing you do is that you start paying other people. So you pay for groceries, it's money going out, and then you pay for your rent, which is money going out. You pay for your internet data, like Theresa said, which is money going out. So the argument for paying yourself was that take a certain amount, proportion of your salary that works for you, and then pay yourself by investing that, so that at the very least, by the end of the day, you also have something to fall back on, and it's not like you're always living hand to mouth, as the popular Ghanaian term goes. Once it comes into your hands, it goes straight into your mouth. I think I've gone through all my questions and topics. If there are any other tips from Theresa or Desmond, we take them now. Or aside anything else from them, would move on to hearing from a young person who is currently signed on to the Secure Personal Pension Scheme. So Theresa and Desmond, any tips, any last points?
Yeah, maybe final 2 points from me.
Desmond, you're muted, please.
So can you hear me now? Well, can you hear me now?
Yes, I can hear you now. Kindly go.
Yes, I mean, usually I always like saying this on my Twitter all the time. So for us young people, sometimes social media sometimes amplifies social pressure. The need to meet certain expectations or to live according to some lifestyle. But it's important we know that there's an income level, right, that can sustain fine dining every single day. There's that income level that will require that you do cocoa and coffee every single day. And there's that income level that will require intermittent fasting. So it's important that you don't fall under social pressure and just jump from intermittent fasting to fine dining every single day. So know where you belong, know where you want to act, and know where you want to get to, then act accordingly. Now, maybe final words on retirement. Don't think retirement is far off. Before you realize retirement is just behind our door. There are people who are earning about 312 Ghana cedi every single month from SNET. So it's important that beyond SNET, we contribute other things. And I'm happy that Secure Pension is doing a webinar like this to educate the people more about beyond SNET, because the earner of Ghana cedis, what can it do for you? Remember, it's either you create the kind of retirement you want or you just accept what shows up. If you don't create what you want, it's not likely you would love what shows up. So thank you, Kwaku.
Thank you very much, Desmond. Theresa, last words, final tips.
I'd like to encourage all of us to take a keen interest in pensions. In Ghana, sometimes and therefore they don't have anything to retire to. So as we have this conversation, let's take interest. This time around, SNET has given us the opportunity to get statements quarterly. So if you haven't updated your records, do so. You get your statement to review. If your employer is not paying you, find out so that you can follow up on it. It's the same with the tier 2 as well. We also send quarterly statements. We send annual statements for people to keep track of it. So don't just put the money away and then go to sleep. You must take a keen interest in it, follow up on it, and make sure that whatever you are putting away is being correctly recorded so that at the end of the period, you would have whatever it is that you put the money into. Thank you.
Thank you very much, Theresa. So now we'll just move on to our next segment. Just a quick 2-minute discussion with a young adult like myself who is signed onto our personal pension scheme. Mr. Akins Wafu, I see you are on the call. Can you kindly unmute your mic, please? Hello, Akins. Okay, I think Akins has dropped off, so we'll come back to him once he comes back on. Okay, so we'll just move on to the next part. We have a small animation, a video, which kind of gives a bit more insight into what Desmond said about saving early, saving consistently, and the returns you'll be looking to make.
Meet Kofi. Kofi's 24 years old. He works in a small firm fixing computers and tech gadgets. Kofi makes 2,000 Ghana cedis per month after tax. He's very smart with investing his money and wants to save 5% of his salary each month to put into a pension pot for the future. Kofi plans to retire in 41 years' time at the age of 65. How much will Kofi have at retirement if he starts saving from today? 5% of Kofi's salary is 100 Ghana cedis, which he puts towards his pension pot, where he is set to gain an estimated average yearly interest rate of 16%. By the time Kofi is 65, he would have contributed a total of 49,200 Ghana cedis, retiring with a total of 5,064,825 Ghana cedis and 5 pesos, at an estimated average yearly interest rate of 16%. The interest gained from his contribution is 5,015,625 Ghana cedis and 5 pesos. Kofi thinks this is a great investment and contacts Secure Pensions to set up his account. Be like Kofi. Plan your future today with Secure Pensions Trust Limited.
Okay, thank you very much, Nanaya, for that. I mean, I'm sure that video has given us a bit of insight on how much we can be looking to earn if we save consistently, just 100 Ghana cedis every month over a consistent period without taking it out. And you'll be looking at close to 5 million Ghana cedis if you can just keep the consistency. And that's on an estimated rate of 16% per annum. Of course, there are some days where the interest rate will do better, and there are some days where it might fall below, but estimating at 16%, 100 cedis a month consistently can get you close to 5 million Ghana cedis. If you start, of course, early at the age of around 24, and you are looking to retire at around 65. So that's about a 41-year period. The less years you put into that equation, the less investment income you'll be looking at. But irrelevant of how old you are now, it's never too late to start. And at the very least, you are guaranteed that once you are ready to come and claim your money, you would have something sizable to go home with. Next, we are going to invite my very own boss, Head of Investment and Marketing of Secure Pension Trust, Baba Kumsin herself, to just give us a bit of insight on how personal pensions with Secure Pension Trust works.
Good evening, everyone. I believe you've had a great time. It's been an insightful time. Well, as secure pensions, like we said, don't only depend on SNIT for your pensions. This new 3-tier pension scheme allows you to do additional contributions towards your pensions. And every Ghanaian worker have up to 35% contribution that you can make towards your pensions, and then you enjoy tax benefits. So at Secure Pensions, we have a personal pension scheme that we want to recommend to all young people and everybody on this panel. With a minimum of just 50 Ghana cedis, you can start contributing every month. It's very simple to sign on to the personal pension scheme. You can either do it via USD or go onto our website. You can send an email. You can go onto our website, go to downloads and download the form, Secure Personal Pension Scheme. Or alternatively, you send us an email to clientservices@securepensionstrust.com. And then we'll get back to you and assist you to complete a very simple form and start your deductions. Because we recommend that you automate your payments to make it very easy. And so we have a direct debit form that you can sign on to, and then every month deductions will be made from your accounts into accounts, and we'll do the investment for you. I think Desmond said something that was very striking, that if somebody starts 10 years early and then you join even in the 5th year and you double your contribution, the total amount that you receive at the end of 10 years will vary. This is because of the time difference you started. So the main essence of this webinar is to encourage every young person to take control of your future. Start early. Don't wait to accumulate so much money before you start. With a minimum of just 50 Ghana cedis, you can sign on to our personal pension scheme. And as stated, the reforms allow anybody as young as 15 years. And I believe that everybody on this panel is older than 15 years. And so we all qualify to join the personal pension scheme. Okay, so the email, you can also send an email to info@securepensionstrust.com, and the client service person will reach out to you. Alternatively, you can go to our website, as I said, and then you go to resources, downloads, you find the form there. We also recommend that you go on to, we have a USD code. It's *718*308#. You can also go onto our USD code and register. So you just put in your basic details and then we'll send you the form. Once we sign you up, we'll give you your member number and then you can be paying via the USD. We know that mobile money is now very popular and there's a very easy way for you to pay. So you can either pay by cash, by check, putting up a standing order or a direct debit as we recommend, or paying via the USD, which has been put in the chat. So we look forward to hearing from all of you who participated today. I mean, tomorrow will be too late. Today is the time, as you've heard what has been illustrated, and even with the animation that we played, the earlier you join, the better. The time value of money and then the power of compounding makes a lot of difference. And if it says that if you don't plan for your future, you'll be given what will be thrown at you. And we shouldn't be surprised that people will go on pensions and they'll be very disappointed because what they thought SNET is going to give them every month is not what will happen. And so let's take our future into our hands and plan towards it by starting early. And since you are all more than 15 years, kindly come on board, and with just a minimum of 50 Ghana cedis, which may be less than a week's lunch money, you can join our personal pension scheme. So thank you all, and we look forward to hearing from you. Thank you, Kwaku.
Thank you very much, Baba. I call her my boss, but she doesn't like it when I call her my boss. That's my boss, Baba. So today, like I said, Secure Pensions Trust, we are in the spirit of giving. We started off by giving credits, and now we are going to give some more, a little more for everyone, because we want everyone to be interested in personal pensions and to be interested in savings and investments and to take their future into their own hands. So we are launching a competition today with some interesting prizes, and our competition is aimed towards young adults, so between 15 and 30-year-old, please. So if you are above 30 years, I'm sorry, but the credit was for you, but leave these ones for the young folks like myself, the youngins, as the popular ones will say. Yes, as the Gen Z people will say. So like I said, the age range is for people between 15 to 30. And like you can see, it's competition time. With me, thank you, you are ready. I'm also ready. So the first prize for this competition is a Samsung Galaxy A22 phone, and also a personal pension account valued at 250 Ghana cedis. So when you win this competition, we are going to give you a Samsung Galaxy A22 phone, and then we should increase the age range. No, George, I'm sorry, please, George, we can't increase the age range, please. 15 to 30, please, for the youngins. The young at heart are not part. It's only the actually young, please. So first prize, Samsung Galaxy A22 phone and a personal pension account valued at 250 Ghana cedis, just to kickstart your investment journey. And then hopefully you also be able to add on more to that so that you can get a good investment once you're ready to go on retirement. The second prize is a personal pension account valued at 250 Ghana cedis. And the third prize is a personal pension account valued at 200 Ghana cedis. Annette, I also identify as young, but this is not for, you have to bring your ID card, please. So you can't identify in person. So what are we looking for? So we are looking to create a unique fund, an investment fund for young adults. So we are looking at all students, people who national service personnel, and people who are entering into the job market for the first time. So like I said, between 15 and 30 years, we want you to create a unique name for yourselves. So come up with a unique name that we think that once you hear this name, you'll be motivated to invest, to save and invest in a personal pension scheme. So all you have to do is to enter that name into the link, which is into the link. Submit your entry at the link, which is being put in the chat right now. Just click on the link, go there and submit it. And then once we've received all the submissions, we will go through it, and then the top 3 will be put to a vote. And then all the top 10, I think, will be put into a vote, and then the top 3 will be awarded the prizes. The link will also be put on our social media handles, Secure Pensions GH, across all platforms, and Secure Pensions Trust Limited on LinkedIn. The competition and its details will be there. So whenever an idea hits you, a spark hits you, you can go there and submit your link, your entry, and then we'll look at it. The deadline for submission of entries is Friday, 10 December 2021. So please, if you want the phone, like I want the phone, but my bosses have said I can't have the phone, kindly submit kindly submit your entry before 10 December 2021. Close of day 10th December, please. The close of day 10 December 2021. And we'll go through it, put it to a vote, and the winners will be awarded the prizes. Thank you very much. We are now at our Q&A section. I have realized I've seen there are a number of questions in the chat, so I'll go through those ones quickly, and then we'll open it up to the floor in case there are any more questions. So the first one, which I think is quite short, is Desmond. Our attendees are asking if you can share your social media handles and where you post your education segments at, please.
Yes, so thank you, Kwaku. Usually, I do most of my spaces or conversation on Twitter Spaces. On Twitter, I used to do a bit of webinars as well, but I've paused on that now with the advent of Spaces. So most often than not, almost every week or two, I talk about something on Twitter. My Twitter handle is at Panelists77. I'll put it in the chat as well. I think last week we spoke about the budget. The week before, we spoke about the budget as well. So you can just follow me on there and just have a conversation with me anytime you want. DM me if you have any questions as well, and I always reach out to you as well. Yeah. So I'm putting it in the chat.
Thank you very much, Desmond. So you can find Desmond on Twitter at Parlenzy77, PARLENZY77. So let me go through the questions in the chat now. First question I can see is, please, Kwaku, after contributing for 9 years to secure fund, do I qualify for a partial withdrawal? Theresa, I'll be glad if you could take this question. So he's asking if after contributing for a 9-year period to the secure fund, I'm not sure which fund, but I'm sure you can touch on the funds and their withdrawal options. Does he qualify for a partial withdrawal? That's from Collins and Tim.
Okay, I'll quickly take that one. It depends on the scheme you are in. For the tier 2, which is targeted at retirement, you can only withdraw your money when you have attained the compulsory retirement age of 60 years, or if you retire early at 50 and you're unemployed or self-employed. But for the provident funds and the personal pension schemes, yes, it's possible for you to access part of your money. And if you're in a provident fund, it will be subject to the rules that your employer has in place. So please, it will be helpful if you could reach out to us directly so that we look at your specific circumstance, then we can fully assist you with whatever help you need as far as your account is concerned.
The next question is, does net require company contribution? All the trustees like secure pensions require personal contributions. I think this is also more pensions related.
When it comes to the scheme, so the first two are compulsory, the one managed by SNIT and then the one managed, the tier 2, which is managed by corporate trustees. So at the end of every month, your employer would contribute 13% and you out of your salary would also contribute 5.5%. So that money will be split between tier 1 and tier 2 in the proportions 13.5 to tier 1, 5% to tier 2. So between you and your employer, you are contributing towards tier 1 and tier 2. But when it comes to the tier 3, where we have the personal pension, yes, and individuals alone without their employer can also contribute, aside the provident fund, which is between employee and employer. So we accept both contributions that are an accumulation of contributions made by employer-employee, and then we also accept individual contributions as well.
Thank you very much, Theresa. The next question is a bit loaded. Okay, so let me see. It said 3-in-1 question. How will we know if our employer is rightfully paying the pension? I think with regards to this from Boas Premier. Okay, so with regards to if your employer is rightfully paying your pension, I think SNIT sends a monthly statement, or you can request for your statement from SNIT, and this will show all your current payments that have been made to SNIT. So through that, you can check if your employer is making your tier 1 pension contributions. for your tier 2, and in case your company has a provident fund scheme, you would have to find out who your pension trustee is for your company, and then you can reach out to them and receive a statement from them. So for Secure Pensions Trust Limited, you can call us and we will let you have your statement checked. I think Theresa has a bit more to add to that.
Yes, quickly to add to that, the contributions are based on rates that have been set in the law. So the other way to check whether it's being correctly paid, is to check the amount. So it's a percentage of your basic salary. It does not include all the nice allowances that sometimes we get paid. So your basic salary, for the tier 2, for example, a straight 5% of your basic salary should help you validate whatever amount has been credited to your statement. If you are getting a payment, a pay slip as well, you can look at the deduction on there and use it to match what has been credited to your account. The same for tier 1 too. Tier 1, the only thing is, even though 13.5 goes there, SNP keeps 11 for pensions, and then the 2.5 goes into health insurance. So check the contributions that way by looking at the rates, and you should be able to tell once whether your contributions are being correctly paid.
The final question from that loaded one is, what are the pension options? What are the pension options for a sole proprietor? So I think we touched on this a bit. The question came a bit earlier, but for a sole proprietor, you should be looking at something like a personal pension scheme where you can make contributions as and when you have money available to you. The good thing about the personal pension scheme is that you don't have to wait for the end of the month. With something like the Secure Personal Pension Scheme, you can sign up, you can make contributions daily, weekly, or monthly. And whichever one best suits you, you can make any amount you want. It doesn't have to be necessarily a percentage of your income, because we realize that sole proprietors, sometimes the money coming to you monthly varies. So you can look at an option like the Secure Personal Pension Scheme. I see a few more questions also in the chat. I'm trying to go through quickly. This one has already been answered. How will we know if our employer is making contributions? Hi, great session. We have learned a lot. Apart from Treasury bills and other government securities, are there any other investment products that individuals can invest in to offer additional diversification? Theresa, I guess.
Sorry, I think we touched on a few of these things. We talked about the mutual funds also that are available and shares. So please, maybe for the sake of time, you can reach out to us, and then we would have some further conversation with regards to that. But yes, there are other ways. You can either pool together with others in a mutual fund or a unit trust, or you can buy shares and a few other things. So please reach out to us, and then you'd get some bit more education on that one.
Thank you very much, Theresa. So let me just hop into the Q&A part, and then there's a question. So is Secure Pension Trust Limited available across Ghana? And also, can I pay more than 5% for tier 2?
We are located in Accra and Kumasi. However, to be able to register to participate in our schemes, you don't necessarily need to be in only the places where we are located. I think in Baba's presentation earlier, she mentioned that you can go online, download the form and complete and forward to us, and then we'll set up your accounts. And in terms of the payment channels, to all contributions go through, all contributions go through the banks that have been licensed as custodians. So you don't need to walk to our offices like we do for SNP to go and make any payments. You just pay to the bank that has the branch closest to you, and then it will be done. So if you want to sign on, again, just send a WhatsApp to the number that has been put on in the chat, and then we'll direct you as to the appropriate bank that your payment should go through. Or if it's possible to set up the direct debit or all the other automated ways, we can assist you to set it up. And do about the 5%, whether you can pay more than 5% for the tier 2. So it's 5% for everybody. The people paying more than 5% are those who are first joining the scheme after 45 years of age. Sometimes the people in the military, they come into the scheme for the first time at about above age 45 years. The reason why that is the case is that for the SNIT scheme, I mentioned earlier, the minimum contribution period to qualify for a monthly pension is 15 years or 180 months. So once you are above 45, you wouldn't meet the period to qualify for a monthly pension. So in that case, all your 18.5 will come under tier 2. So that's the only situation under which you can pay more than 5% under the tier 2. But if you want to make more contributions, then it has to go under the personal pension scheme if your employer doesn't have a provident fund.
Thank you very much, Theresa. I think the last question is going to be, what do we do if our employers don't pay our mandatory pensions?
So the opportunities that are available to you are to raise it with your employer. But we realize that sometimes to protect jobs, employees find it difficult to go and raise these kind of issues. But there's a regulator of pensions, as I indicated in my introductory remarks. So if you report them to the regulator, they will send inspectors to your office to come or compliance officers to your office to come and see your employer and then find out why they are not paying so that they can assist you as you require.
Thank you very much, Theresa. I think we've touched on all the questions. Desmond has also put a couple of links to answer some questions which I saw in the chat. So I think there are links to some of his YouTube channels explaining about unit trust and mutual funds and investments in Ghana also. So if anyone is interested, the links are in the chat currently. I think we are a bit mindful of time now. We don't spend too much time here. So without much ado, if there are no further questions, I don't think so. Sorry about that, guys. Just a slight technical hitch. So Desmond, okay, so Desmond has put the links now in. Yes, I think at first he posted it into the wrong chat, but it's now in the correct chat. So the links are there, and his Twitter handle is also there in case you want to follow him and get into his spaces. Michael Chum, I see you are asking for your airtime. Kindly, Nana will reach out to you. There was a lot of answers, so I'm not sure who came in first, but if you've not received it yet, kindly reach out to Nana and he will reach out to you actually and then sort it out with you, Michael. Thank you. I see another question has come in. Let me see if I can find it.
I think there was a question before that. How do you make money on pensions that guarantee returns on potential clients' pensions? What is the rate of interest?
Samuel Japan Dampa, sorry, apologies. Okay, I just saw your question. I think I missed it. So how do you make money on pensions that guarantee returns on potential clients' pensions? What is the rate of interest per annum? How do you make money? Okay. I think I understand your question. So Theresa will just touch on it quickly and then.
Okay, so quickly, when we receive the contributions, they're invested in a range of securities that the NPRA has already established. So there's a permitted range of investment that we can invest in. Some of the monies are into government securities, some are into shares. We have also the mutual funds and a number of other investments. So once we invest them, that is how you get your returns on your investment, and that is how your account appreciates in value. And in terms of the rate of return, I mean, it is not a fixed rate, it's a defined contribution, meaning it's like a savings account. So your return is based on how the market performs. So in terms of the return, that is how it is determined. But if you want more details, more information to be able to make a choice, please send us a WhatsApp. We'll share with you the performance of our funds over the last few years for you to see, so that you would be able to appreciate better how the funds are doing.
Thank you very much, Theresa. I think we are very mindful of time. We don't want to spend too much time, but there's a last question, so we'll just take this. After this, if you have any more questions, kindly just head to our website and send us an email, or you can just call us on 0302-771-248, and we'll be willing and able to answer all your questions regarding pensions in Ghana. So our last question for today is going to be, can I still pay my tier 2 after self-employment? So I think you mean, if you are self-employed, can you still pay tier 2 by yourself?
Yes, so self-employed can also contribute towards their pensions, but you join the you can join the personal pension scheme to contribute towards your pensions as a self-employed person. Thank you.
Thank you very much, Theresa. I think we have elapsed our time. The aim was for 1 hour. We've done about 1 hour 30. So, like I said, kindly, if you have any other questions, kindly call our phone number. It's in the chat. You can also WhatsApp us. The WhatsApp number was shared in the chat earlier. I think Nana will share the WhatsApp number again. And you can just reach out to us at any time, and we would be glad to take any question you have. Okay, so I think we are ready to wrap up. So just want to say thank you to everyone for joining today. Thank you for taking time out of your busy schedules to join. We very much appreciate it. And I see people saying they are looking forward to more of this. And yes, going into the next year, we are looking to having this on a regular basis. So kindly keep your eyes to the ground and your eyes on your emails. And once we send the link for the webinars, kindly take time out to join. We'll try and find a conducive time that enables as many of us as possible to join. We'll also try and have Desmond on as much as possible. And of course, other panelists who will all be willing to give us a bit more information and insights. I also want to thank Theresa, Managing Director of Secure Pensions Trust, and Baba, Head of Investment and Marketing, for taking time out of their schedules to sit with us today and give us a bit of insight. Also, thank you very much to Desmond for taking time out of his schedule to join us. Desmond is the Head of Client Services at Stanbic Investment Management Services. And if you ever want to have a conversation about the Stanbic products, you can just walk into their office and have a conversation with him. And if you ever want to have a conversation about Secure Pensions Trust, we are located in West Airport. We are not too far from the Merrimack Council, just down the road from the Villaggio buildings. You can just head into our office, give us a call, go to our website, and we'll be willing to talk to you at any time. On social media also, you can find us at Secure Pension GH across all social media handles. So we are on Twitter, we are on Instagram, and we are on Facebook. You can find us at Secure Pension GH. And on LinkedIn, you can find us at Secure Pension Trust Limited. Thank you everyone for making time. Have a good evening, and we are looking forward to seeing you next time. And goodbye.